So we're continuing now with another small industry, the insurance industry and insurance services. And obviously our focus is going to be, forgive us, very simply the same. What does it mean for the economy? Are we facing disruption of services? Are we going to have a continuity? What's going on? Obviously, and it is really the objective of this morning, beyond the general question, we all know that financial services are very different and specialized fields, hence the fact that we get into the same questions, but seen from the point of view of different industries. And obviously the insurance industry, I don't want to speak for the two great specialists that we have here this morning, is a particularly, in my view, complex industry because we have P&C, we have life insurance, which are two very different businesses, and we have to look at the issues and even within P&C, there's many different types of businesses. So we will need to refine and get into the detail of what it means for maybe not each segment, because we only have 40 minutes, but to understand what's going on. So with us this morning, as you know, we have Olaf Jones, who's Deputy Director General of Insurance Europe, and also Eric Lombard, who's advisor to the CEO of Generali Assicurazioni, forgive my appalling Italian accent, and Chairman of Europe Assistance. Perhaps, Olaf, do you want to start to give us the view of Insurance Europe on those issues?
Thank you very much. Very much appreciate the chance to have this discussion, which is, as has been discussed, will have a very big effect one way or another on Europe, on all of us. So Insurance Europe, just to make clear, we're a federation of federations. So we work with our members across Europe in order to deal with regulatory issues and related issues. And Brexit, of course, is a very significant one at the moment. It's worth noting that we have members who are inside the European, inside Europe, and also some which are outside the EC, including, for example, Switzerland and Norway. So we're used to sometimes having those discussions which affect everyone in a common way, even if they're not all under the same exact legal system. I think for us, our focus is really understanding the technical, legal, and operational challenges that Brexit can create for companies across Europe, UK companies and European companies. And I think it's worth noting that the insurance industry in Europe is the largest in the world, that we're also one of the most active outside selling business outside of Europe. So one of the key concerns is the overall competitiveness of products delivery to customers within Europe, but also the position of the industry worldwide that could be affected. And I think that overall it's probably worthwhile sort of looking at there are different problems for different players depending on how they're structured. I think that typically the industry is organized by subsidiaries, but not entirely by any means. But and obviously the problems or the technical challenges in terms of the need to change are less for those companies operating as subsidiaries already. But even those companies will face challenges. They face questions about their derivative contracts, which are multi-year often, and how will they be affected. Outsourcing, these often operate on a pan-European basis with different parts of the group doing different activities. They may have to restructure. They're looking at obviously access to services, including investment services, and issues such as diversification, which matter fundamentally to insurers. And insurance is almost by definition benefits from a pan-European, if not worldwide approach in terms of investment, in terms of diversification. So there are common issues for everyone. But I think the issues are clearly more acute or urgent, one can say, for those that have been organizing themselves under a branch system or using freedom of services. And there we have a range of companies. There are some companies which are operating in the UK, selling out into Europe, and some which are outside, based, for example, in Ireland or other places in Europe, selling into the UK under either branches or freedom of services. And I think that for them, there are a number of issues there. One is for those, if we look at new business, and then if we look at existing contracts. And for new business, conceptually, I think the issue seems rather simple in the sense of they have a choice. Either they move to a third country branch system or they set up a subsidiary. And so while those conceptually are fairly straightforward, the practical issues are quite significant. There are significant costs involved in setting up a subsidiary, and less so with a third country branch, but there's legal questions of whether a third country branch is going to work. And you can't actually start looking at the third country branch because that only applies to non-European countries. So at the moment, it's not necessarily even an avenue they can have any certainty on. In terms of subsidiaries, which again may seem like the straightforward choice, there are practical issues about timing. Typically, it takes up to 18 months to set up subsidiary. So unless they already started some time ago, they're going to face challenges. Even under the best of circumstances, the 18 months were under a situation where there's relatively few subsidiaries being set up. We're talking now about a particularly very significant workload. To give you a sense of how much potential work we see, on one hand, we understand the PRA has 700 branches registered in the UK. Now, even though not all of those are going to be necessarily very active and may not decide to turn in subsidiaries, that is a huge amount of work, and it's unclear whether even before it would be possible with a new workload, it's going to be even more difficult. Likewise, the other way around, in Europe, for example, just one company in the UK, we understand, has 500,000 customers spread across a number of European countries. So there again, there'll be a problem the other way around. And again, will those supervisors be ready to deal with the necessary regulatory changes? So I think, but that's some of the challenges being faced by those wanting to sort of make sure they can deal with new business. In terms of existing contracts, it's even more complicated. The sort of logical option could be to transfer legally those contracts from in the case of a continental company into a UK operation and vice versa. So of course, to do that, you have to have a subsidiary potentially or a third country branch, so they have that practical problem. But transferring contracts is also not straightforward. That can involve, again, a very lengthy process. In the case where contracts are part of, for example, with profits fund, it's not clear how you can separate funds and liabilities very easily. So even the legal rights and the challenges are difficult. So I think that there are, and there's other legal issues which we'll come into maybe further on in the discussion, which can create real barriers to actually continue in terms of continuity. So I think there's a lot of questions about how this is going to work. We're quite, in a way, early in the process of really gathering information from our members and from their members. Obviously, companies are taking action. Some we've seen are making decisions of moving, but they're early in that process. Others are obviously looking into these contract transfers. But I think we're still in the process of understanding the operational and legal issues. And obviously, over the next few weeks and months, that everyone is working very hard to understand that.
Thank you very much. Eric, do you want to give us your view on those topics?
Yes, first perhaps to say, after your introduction, that you can look at insurance as being a very simple industry. We are doing something which is, in terms of financial structures, the opposite of what the banking industry is doing. The banking industry is driven by the asset side, by lending or capital markets. We are driven by liabilities. Any insurance contract is a liability of the insurance company to the client, whether we speak about non-life, life, pension, and so on and so forth. And if you look at this part of the business, which is a business with client, the liability side of the business, it's a very local business, because even if there is a single rule book, not a single supervision, but the same tools of supervision, the products are very local. And a savings product in Germany, in France, in Italy, any country is, at the end of the day, quite different. Having said that, despite the fact that it is a local business, we, of course, are hit by the Brexit. After having mentioned the liability side, on the other side, if we look at the asset side of the business, that is the assets we manage, and here we are speaking about trillions of assets, there we are totally in line with what our previous colleagues have been saying. It's issues about capital markets, and then the same comments apply. Speaking about our business, we are certainly not the main casualties of Brexit because of the local essence of our business. Having said that, and I am totally, of course, in agreement with what Olaf said, there are two main and important operational consequences. The first one is if all the branches have to be transformed into subsidiaries, that's a huge work not that much for the companies, that's not that complex, but for the supervisor who will have to approve those transformations, can they do that in the next 18 months? That is a real challenge. But that's a challenge that I'm sure they will cope with because there is little choice. What is a bit more cumbersome is for the existing contract that has been issued in freedom of services. It is not, generally speaking, a huge proportion of the market, because as I said, the market being local, it is not huge. But what is specific about what has been written in freedom of services is very often long-term contracts, and contracts that are complex and that cannot be transferred easily. I looked at the French market. On the French market, we are probably speaking, it's a rough calculation, about 3 billion of liabilities. But if you look into more details, for instance, 20% of professional general liabilities is written outside, is written by UK insurers toward French clients, 40% of medical general liabilities, and also some pension businesses. I don't think that it is reasonable to think that we can transfer those contracts or to other writers, other underwriters. So, and that has been the motto, by the way, of the first roundtable. The only issue is grandfathering. But grandfathering means it has to be addressed in the negotiation between the British and EU 27, and that has to come on the table quite soon, because we are speaking about type of guarantees that are absolutely essential to the companies or the people who are benefiting from it. So I would say the operational consequences of Brexit for the insurance industry may be not massive, but for the companies and the clients that are hit by the consequences of Brexit, it is very important and critical.
Thank you very much. There's a number of probably technical issues that could be interesting to look at more closely. Is there a data issue, a data protection issue, a data flows issue that has to be taken into account in the context of Brexit for the insurance industry? Is that something that's important and that will have an impact both for companies and for customers?
Yes, is a short answer. I think, and this is something that actually affects both whether you're organized as a subsidiary, it can affect you, although maybe less so. But companies increasingly have been organizing themselves on a group basis, those are the groups, and so their data systems may be based in one country and serving all of their operations, even if they're subsidiaries. Obviously, it will affect those that need to set up from scratch. So right now, many companies rely on the ability to transfer data across borders within Europe. Obviously, there are certain different rules of transferring beyond Europe. And that obviously will have to be dealt with, because if there is no transitional or grandfathering any other agreement, then at the deadline, they will no longer be able to do that. And we understand that already companies are looking into having to establish local databases in order to make sure they can cope whatever the outcome is.
Yeah. But we all heard Olivier Gerson say we have to, to prepare for the worst. Nobody wants it, but we have to prepare for it. I mean, how do you prepare for that on that particular issue?
You have to spend
Seems
a lot of money.
Daunting.
It costs a lot of money, and there are obviously sometimes practical challenges in doing that in time. But we understand that from some of the in our own internal Brexit projects that we've had discussions with our members, but also with companies, we understand that companies are already starting projects to make sure that they're going to be ready in time.
Yeah, because tempo of negotiations is one thing, but tempo of doing, organizing companies is another thing. Yes, Eric?
Yes, I would not that much link this issue of data protection to Brexit. It is an emerging issue which is absolutely huge, and where the regulation in the various countries are not homogeneous. And of course, even not between the British and the continental Europe. So it is an important issue. It's an issue we would have had to face even without Brexit, in my view.
Okay, very interesting. Maybe two last questions is if we can go a bit deeper, my favorite question again, on the impact on customers. Are some customers going to be facing disruption or, if not disruption, higher cost on the insurance products they want to buy? That's one thing. Well, let's start with this and ask the second question after.
Well, I think, again, we can split it into those sort of new customers or new contracts and existing contracts. I think new contracts, they could be, in principle, relatively little disruption. There may be a reduction in choice because there may be less options if there's less freedom of services, less branch business. But I think that new business may be affected by costs and availability, but I guess it's less acute. I think the really acute concern is around existing contracts where there are legal questions. For example, if it's a cliff edge, which obviously we would like to avoid, but if that happens, then, for example, in a situation where a continental company is selling into a UK customer, they will not be legally allowed to either collect premiums or even pay claims, even pay legitimate claims. So, as Eric mentioned, the impact on individuals can be huge. If you have a fire in your house and you cannot get a claim, pay a claim, you obviously your disruption or your pension payout, all of that could be affected from a legal point of view. And what's more, we understand that any payment that is made will be treated, unless the payer is recognized an insurance company, could be treated as taxable income for the individual. So the consequences can be very large if there's a cliff edge. So I think that that's one area where, for example, the negotiators have to look at that problem. And we've heard that, combination of grandfathering, transition and other rules have to be implemented. But I also think it's something where the member states, whether it's the UK or the continental countries, have to consider what they could do locally, even independent of any negotiations, in order to make sure that they avoid a cliff edge in this particular area. Because this is not about costs, about just companies having to try harder or do more or spend more money to solve a problem. It potentially is a legal constraint.
And again, the insurance industry in that regard is very different from the banking industry or the asset management industry. That is, we don't have, as insurance companies, I'm speaking with my Generali hat, Generali is a very European and global company. Generali has operation in all European countries. We don't have products that are addressed to the whole European market. I'm speaking about retail, but even on the corporate side, if you insure a corporate that has operations in many countries, the contracts are different from one country to another because you have to have anyway a local contract to provide explicit guarantees which can vary from one country to another country. Meaning that the effect in terms of productivity of having one market for the insurance business is a real positive effect if you look at the asset management side, if you look at the size of the company. But if you look at operations are really very specific country by country. And on the top of that, and probably we will say a word about supervision, we have local supervisors. They use the same, for instance, Solvency II framework in terms of solvency. But in terms of operation, everyone can have a specific view on checking how operations are organized, whether there are Chinese wall for health business or not, for instance, and so on and so forth. So this very fragmented type of operation means that maybe the customers cannot have the whole benefit of which would be in one single market, but also the disadvantage would not be so big. Last point on that, when we compare what's happening, for instance, with the United States. The United States, for the insurance industry, have exactly the same type of structure because there are one insurance regulator for each and every of the 50 states, which is, by the way, why the US insurance industry is not that much integrated. So the way to approach this industry is, again, very different from the other financial industries.
So thank you for launching me on the supervisory and issue. Yeah, let's go a bit further on this particular issue. Do we, in the insurance industry, have a convergence of supervision issue? Is it a particular issue in the context of Brexit? Do we have potentially unnecessary competition between regulators that could be detrimental to the market? Or do you see the situation as under control on the regulatory / supervision side in the context of Brexit?
Again, the regulation is European, clearly. By the way, it is more homogeneous in terms of solvency through Solvency II than in terms of relationship to the customers, because there probably there are progress that can be done. My general comment on the evolution of supervision is, as our former colleague said, if it ain't broken, why fix it? The system has been put in place in 2010. The industry fared well in the financial crisis. It's very different from the banking industry. And the industry is very autonomous from central banks. That is very important. Because the discussion on the evolution of supervision is influenced by what happened on the banking side with a single supervision mechanism which is at the ECB, because of course the banks are related to the central banks and there is one unique central bank for the Eurozone, and hence we have this single supervision mechanism. We don't believe that any system that would get closer to a single supervision mechanism would bring value. Because first, the industry is very scattered. There are many, many actors. And if you supervise only the big players at the central level, you supervise a minor proportion of the industry. But more importantly, the supervision is working well today with the local supervisors, with EIOPA, which is a European Supervisory Authority in charge of insurance, making sure that there is convergence in terms of action, in terms of rule books, and so on and so forth. There is a willingness from EIOPA, which is official, which is to have more authority, especially looking at models, solvency, and so on and so forth. We don't believe at this stage that it is appropriate, speaking about a solvency system which is quite new, because Solvency II has been put in place a bit more than 1 year ago, and again by an industry that is working well. So our position, speaking about the industry in that regard, is let's see how the system works well under the new Solvency II regime. Let's see if we see problems appearing. Today, we have not seen problems in terms of solvency, in terms of role of the supervisors. Last but not least, Jacques de la Rosière, who was at the origin of the European system through a famous report, made a report to the Commission a few weeks ago on that. And as he said, as he wrote in the report, it's not sound that supervisors write rules that apply to them afterwards. And so we have to make sure that there is a clear distinction between the role of supervisors, which role is to supervise industry, but the rules has to be written by the regulators, that is by the Commission or by the Ministry of Finance. And here, I think we have to be very clear on who's doing what. And in that discussion on the evolution of the ISAs, there is a tendency to mix a bit the roles of the political level, who have to set rules, and the supervisor who have to apply rules.
Yeah, and I would also, I mean, fully agree with that. I think that there are sort of 3 potential supervisory sort of discussions around, generally, and including around Brexit. I think the first one is around the ESA review and their structure, and there I agree that the current structure, I think, is the right one for now, certainly, and it's still fairly early in terms of its evolution. It's only been in place for 6 years. In the insurance rule book, as it were, is relatively also early in its development. In terms of Solvency II, it's only 1 year. In terms of the conduct of business rules, they're still yet to be implemented. So I think it's not the right time to change things. Especially important for insurance is the maintaining the expertise and the focus on insurance, because, as Eric mentioned, there's a big difference between insurance, banking, and asset management. So I think of that, in terms of the ESA review, we think that the current system is the right one. I think there are questions about governance and about separation of duties, and I think that, in a way, should be the focus. I think the second conversation one can have is about a level playing field and harmonization of standards. And I think that's an issue already with or without Brexit. And of course, Brexit will probably make that more of a question because you'll have a lot of some sort of relationship going forward. But that's already a bit of a challenge right now in terms of the work EIOPA does. But again, it's early days, and EIOPA is making progress, and we think that we'll have to watch and see how that plays out. But the industry is very in favor of strong regulation and a level playing field, and that'll be important post-Brexit as well. I think the third element is around potential sort of need to change regulation and whether the UK will be going in one direction and Europe in another. And I think if we look at most of the issues, and obviously we debate these quite often within Insurance Europe, is there's a lot of commonality and concerns. For example, in Solvency II, the big common concern is how it deals with long-term business and to avoid volatility. That's a concern from the UK industry. That's a concern from the rest of Europe as well. In fact, it's a global concern as well. And so we have a lot of commonalities. So I think on those issues, we have some joint concerns, and I think we'll have to work on that together one way or another, even if the legislative process is slightly different.
If I can add one word on that, because Olaf is totally right. Olivier Gerson said a few minutes ago that we had an issue in Europe of adjustment between savers who were short-term and investment needs who were long-term. The very economic purpose of the insurance industry is to make this adjustment. The point is between this adjustment that is transforming short-term or, by the way, also long-term savings into long-term investments, there is a solvency regime. And one of the weaknesses of Solvency II is that the cost of capital of long-term investment, infrastructure investment, equity investment is a bit too high in our views. But seen from the industry, it's not that much a big problem because that means we invest less in equities, in infrastructure, in long-term bonds. But looking from the economic standpoint, I think we would benefit collectively to have, because the Commission is reviewing the structure, the organization of Solvency II, to have a Solvency II regime which would support the aim of the industry, which is really to finance the long term and to give them a positive answer to the problem that has been put forward by Olivier Gerson.
Many thanks. If there are questions from the floor, it's time to raise the hands. If not, my last question will be linking back again to our Brexit discussion. We've seen debates that started recently between different EU 27 regulators when large insurance companies chose one center and the regulator from the other center said, oh, you're not tough enough, there's not enough substance in your requirements. My question is not about getting specific about this place or that place, but do you feel this is just normal competition for business, which is part of life, or do you think there is a substance in the claim that the rules are not applied consistently and therefore it's not healthy?
The way I see this competition is not that much a competition between supervisors, but a competition between states, tax regime, infrastructure. And if the Lloyd's of London has decided to open a subsidiary in Brussels, I'm not sure they have chosen the Belgium supervisor, who, by the way, is an excellent supervisor. They have chosen Brussels as a financial center, also the capital of Europe, and so on and so forth. So I think, and I'm speaking also as a Frenchman, certainly France has a lot to do in order to make understand that we are pro-business and for the long term, and hopefully there is a new government that will work in that direction. So I don't see issues of regulation there. Having said that, there is an issue which will be the competition between Great Britain and EU 27, because Europe is a story about convergence, and Brexit will be a story about divergence by definition, between the Great Britain and EU 27. And certainly we will need to have the British authorities to be observer at EIOPA, for instance, and the other way around, to make sure that there is not too much divergence going forward.
Olaf, one last word.
Now, I also think that in practice the issue is going to, I think, solve itself through the joint work within Europe. We have the ESAs very focused on this, as we've seen by their announcements. We've heard from Luxembourg and others who involved. That's absolutely not their intention. I think the one thing I would say that companies, I think, are quite aware of is, and that's linked to Solvency II, for example, but other processes. There are approval processes which can take a very long time, model approval and things like that. So I think the supervisors that are able to show themselves to be sort of rapid in their approval and allowing the businesses to operate without constraint like that, I think the operational issues are definitely as large as other concerns. So I think that companies are choosing locations for a whole range of reasons, as Eric has indicated, and I think these companies are very used to and expect to be very strongly regulated wherever they go.
Many thanks. So we're going to finish this panel now.